Navigating the oversupply hurdle in property investment. Hey there, it's just Ryan here. Today, we're going to talk about the second hurdle to achieving capital gains in property investment, and that is the oversupply of housing. Now, picture this scenario. Developers going on a building spree with an abundance of land sales in the market, constructing new properties without paying attention to the actual demand from home buyers. Now, let's explore how this oversupply can significantly affect you as a property investor and why it matters. Now, oversupply is often the result of reckless and unconstrained building activities by developers and stakeholders that is not keeping in line with genuine market demand. Factors like shrinking population due to low birth rates, an aging population, or even a net outflow of people from the country can further contribute to a long-term decrease in housing demand. The result? An imbalance in supply over demand. So, how does this oversupply affect property values? Well, think of it like this. When demand for a product drops and there's an abundance of supply, what happens? Prices drop and it becomes harder to sell. You might remember the early days of COVID-19 pandemic when masks were in high demand and their prices simply skyrocketed. But as demand decreased and as we step into the post-COVID times, supply becomes overwhelming abundant and mask prices fell subsequently. Now, this analogy is similar to the property market. If you are holding a property in an oversupplied market, it can be tough to sell for a good profit. Your capital becomes stuck in an asset, leading to opportunity cost. The money that you have invested in that property could have been used for potentially more profitable investment elsewhere. While your property's value remains stagnant, opportunities elsewhere might just be passing you by. Now, here in New Zealand, the story is quite the opposite. Imagine a market where supply is severely limited because developers are not building enough of modern homes due to the lack of urban land for residential developments, long consenting delays with local councils, shortage of manpower in the construction industry, and a high percentage of existing housing stock that is plagued by leaky home issues, and of course the lack of big capital. And couple that with a demand that is growing exponentially due to a record high migration into the country and an increase in organic population. Now, this imbalance in demand oversupply has created a constant lag and gap in the market and has seen property prices going up steadily over the last 3 decades. If you are keen to find out and know how you could invest in the New Zealand market and take advantage of the market dynamics and how you could diversify and scale your real estate wealth, feel free to reach out to me with a private message. If you found this useful, remember to share and like this video, and do remember to follow me for more property insights into the next biggest hurdle to achieving capital gains.